In this quick video, I'm going to be revealing the easiest ICT strategy that you can possibly use. This is so simple. You don't need a daily bias. You don't need to understand all the different lingo that ICT offers. Even though I love ICT, you don't need to understand all these extra concepts. It's very, very, very simple. And if you're using this on prop firm challenges or to get payouts or anything, you definitely can use this strategy. It's super simple and you don't want to overcomplicate it when it comes to trading. So I highly, highly recommend watching this video through the end. I'm going to be showing you guys a bunch of different things that you can use to get pretty much an upper hand when using tools like TradingView, having a bunch of extra tools that train your eyes on what to look for, when to look for it, how to set alerts, really just breaking everything down for you guys. So with that being said, let's go ahead and dive right into the video. So before we dive into the charts, I want to walk you guys through the philosophy as to pretty much how you approach this trading setup. So the first thing we need to wait for is a new daily high or low to be formed in the current day. So let's say it's 7 a.m. and then 9:30 open comes out and the market runs below the current daily low. That's exactly what we're waiting for. I will show you guys later in this video how you can set up alerts and have different tools that help you access these things. But for the most part, you're just waiting for a new daily high or low to form on the current day. After that, you're waiting for a market structure shift, ideally on a 5-minute time frame. I've tested this on multiple different time frames, and I've just personally found that using the 5-minute, especially for trading NASDAQ, is pretty much the bread and butter for me. I would recommend doing this on a 5-minute. I don't recommend going down to like a 4-minute, 3-minute, 1-minute, 15-second. Don't recommend that stuff. Just stay on the 5-minute for this particular model. It will serve you the best. So once a new daily high or low has been formed on the current day and you have a market structure shift on a 5-minute time frame or higher, then we're looking for the next component. It should be a clear fair value gap on the 5-minute time frame or higher. And again, in just a few minutes, I'm going to show you guys on the charts what this looks like so you can start to map out this model and start to train your eyes as well when you're looking at your own charts. So after we've run the daily high or low on the current day, and there's a market structure shift on a 5-minute or higher, and there's a clear fair value gap on the 5-minute or higher. At that point, you're basically faced with a decision. What do we do from here? Is all of that true? If so, then you're going to go to yes. If that's not true, then you're going to go to no and basically repeat the same steps until it happens again. So let's say in this example, all of this is true. Very simple. All we have to do is map out the entry, stop, and target. The entry is very, very simple, guys. It's going to be the fair value gap that formed. So basically, you can set that limit order at the top of the fair value gap, the middle of the fair value gap, or the low of the fair value gap if you're looking to buy, for example. And it's just vice versa if you're looking to sell. Now, if that's the case, you're pretty much done. That is your model, right? You're just waiting for a new daily high or low, waiting for a 5-minute market structure shift, waiting for a 5-minute fair value gap, and then you're mapping out your trade. Your low is below the current daily low or high that formed, which was this liquidity run here. And then your target is just going to be any swing high point above or ultimately 50% of the current daily range. So once you have all of that in check, you're pretty much good to go. So now if everything is set from your prerequisites, you've got a new daily high or low that has been formed, you have a 5-minute or higher market structure shift, and you also have a 5-minute or higher fair value gap. At that point, if all that's true, you're going to move here to mapping out your entry, stop, and target. And this is a very, very simple model, guys. You're just entering at the 5-minute fair value gap. Your stop is below the current daily high or low, and your target is 10 to 20 handles. So it is literally that simple. You don't have to overcomplicate this stuff. And again, if you're trading with something like NQ, then at the end of the day, you can really rack up if you have multiple different accounts, trading this, copying it, all that different stuff. Very, very simple strategy to get 10 to 20 handles consistently out of the market. So again, just to quickly review this, you can enter anywheres inside of that 5-minute fair value gap. You can enter at the top of it, the middle, the bottom, pretty much any level inside that fair value gap is a valid entry. For me, I usually just set my limit order at the top if I'm looking to buy and my limit order at the bottom if I'm looking to sell. And it's pretty much it. Then I just kind of let the trade do its thing. Your stop loss is going to be below the current daily high or low. That's going to be the run that formed here. And your target, 10 to 20 handles above, or for the more advanced traders, you can hold it until a 5-minute swing high or low is swept Or for even the more advanced traders, you can hold it to 50% of the current daily range or for a new run above daily liquidity. Okay. And once you understand all those components, you pretty much have everything you need to go attack the markets with a successful model. And let's say all of this here for your prerequisite steps is not true. Then you simply just have to wait for a new daily high or low to form with clear market structure and fair value gap. So all you're doing is just looping back to step one, assuming that these things here are not true. If they are true, very simple. You just move over up here, got your steps, got your entry, got your stop, got your target. Good luck, good trading. That's it. You're done, right? So, and a key component to this is you want to set the trade and then just don't micromanage it. Just let it do its thing. Let it either stop you out or hit your target. So let's go ahead. We'll review what this actually looks like in the charts and break it down for you guys. All right, so now we're looking at the charts. In this example, today is July 14th. I've gone back into June. This is June 17th. I've found a trade setup, and I just want to walk you guys through what this actually looks like. So let's first dive into the fact that there has been a new run on the daily low, okay? So at the time of this, we can see here, if we take a line, this is going to be the current low that we had. Right? So this is going to be our daily low. And then what happens is at 9:45, we run below that. So now we have a new daily low that's formed here. So what we're waiting for is a 5-minute fair value gap and market structure shift. So what we want to look at right now is a previous swing high point that made the impulse run lower below the prior daily low. So that's going to be this swing high right here. And once the price trades above this and leaves a 5-minute fair value gap, that's going to be our entry model. So let's go ahead and skip ahead a bit. Now we've traded above it. This is a clear market structure shift. And then what we're looking for is a 5-minute fair value gap. So you guys can see there's going to be a 5-minute fair value gap that forms here. And there's also one down here. You're always going to find the most success with the fair value gap that's in the most discount or the most premium area. So keep that in mind because it's very important when it comes to actually identifying which gap to use. So for example, you have this one here. And then we also have this one down here. Okay. Both of these are valid trades. But the better of the two to use is going to be this one down here because it's in the most discount area, okay? So if we take a fib, just as an example, we draw it from the low to the high. We could see that this one here is below 50%. It's going to be the discount fair value gap. This one here is still up in a premium. There's nothing wrong with that, but you just want to keep in mind that sometimes you may have to deal with a retracement coming through this gap into this one before it resumes higher. Let's go ahead and map this out a little bit further. All right, we see price trade into the first fair value gap. We can go ahead and buy it here and still set our stop loss below here, okay? The target that we're looking for is going to be the next 5-minute level of liquidity. So we could see we have relative equal highs here, or we can even target a new high of day. This is going to come down to your own experience and be able to understand what the draw on liquidity is, but ultimately, you can just get in, get out, and just have your quick little run to a 5-minute high, and that's it. You don't really have to do anything else after that. So one thing that you want to consider is obviously we're risking $120, and here we would only be making $45. There's also nothing wrong with that. Some people that I know personally have a negative risk to reward ratio. Basically, they're risking more than what they make on each trade, but they're still wildly profitable. So it's really up to you guys and what suits you best in terms of your personality, but I wouldn't have a problem taking this trade simply because of the fact that it is following the model that I know and trust, and I wouldn't really question it, right? So if we play this forward, boom, now we see we have gotten a deeper retracement. So like I mentioned before, we could enter on the first one, but we're going to have to sit through more drawdown. Now, in my case, what I would do is I would add another one. So I would basically use both. That way, if it uses the first one, great, then I'm part of the move. Or if it uses both, then cool, I get two different fills. That's my personal style of trading, though. You guys do not have to do that. You can use one of these fair value gaps. You don't have to trade both of them. And again, keep in mind, if you're entering the first one, you do have the likelihood that it may retrace lower into the second one, which is going to put you in drawdown before you see profit. Both are valid. Both are on a 5-minute. Both follow all the different rules that we've talked about here today. But this is something you want to keep in mind. If you have a fair value gap that's deeper in discount, that is going to be more likely to get hit. And the first one is more likely to get traded through. Okay. So if we play this forward, we can see this is our target up here. So we'll just go ahead and put target and make sure that we understand that that is going to be our target. And we also have our higher target up here. So what I'm going to do in this example is I'm going to take a partial here, trail my stop, and close the rest up here. And this is the exact way that I trade on a daily basis. We can see the market chops around that fair value gap a little bit more. There we go. First target is hit. So we can take one off here. And then we can go forward. Boom. Second target has now been hit as well. And you can see this trade setup happened from 10:25 in the morning Eastern Standard Time until 11:10. Very, very quick trade. This did not take a long time to pan out. It happens all the time in the charts. You can spot this pretty much every day, if not every day, multiple times a week, sometimes even multiple times a session. So you really want to keep that in mind. Now, what I'm going to do really quickly is I'm going to go back just to right here, and I'm going to show you guys a few of the tools that I use that help ultimately show me where all this stuff is. So I'm going to keep the fair value gaps on here. We know that this is the low, but I'm going to go over here to my indicators, and some of my good friends at FX4, so FX for Living and 2 Degrees have created some really, really awesome tools. And I use these on a daily basis in terms of being able to understand what price is telling me. So here's how it works. I know there's more things on the chart now, but just bear with me for a second. You can see that basically the high and low of the day is currently being tracked with this gray shaded box. We have a dark black line here and a dark black line here, and then a small dotted line in the middle. That's the daily high, that's the 50% level of the day, and that's the daily low. Basically, what we're waiting for is for that new daily low to be taken in this example, and then we can see this box pops up. So we have a red and blue box, and what this is showing us is premium and discount after we have taken a new low or high. And I love this so much because it really just shows me this is the gap I should be using because it's in discount. This one really shouldn't concern myself with because it's in premium, right? So now we can scrub forward, boom, wait for it to trade into our level, set our stop loss. Let's say we're just aiming for these equal highs. That's it. Boom. Now we've got the trade. And if we scrub forward, you could see that's it, right? So I love using this tool because it really just helps show me visually where things are that I don't have to like manually draw or go back and find. And it's just super useful because, again, it just shows me premium and discount after a new daily high or low has been taken. So if you guys are interested in this tool or just want to check out some of the other things that they have, which again, they have some awesome stuff. There's all kinds of different tools that I use over here, not to mention a multiple different layouts and things that I use over here with different types of tools that they provide. So all kinds of cool stuff there. If you want to check it out, it'll be linked in the description below. It's called 2 Degrees. You can go on WAP. They have a bunch of different examples. You can check them out, watch little quick videos, explainers, all that stuff. But like I said, I highly, highly recommend it. And if you guys want to show me some love, you can use the coupon code for 20% off using JROD4X. And yeah, that's pretty much it. Definitely recommend checking out these tools. They're extremely valuable. That's going to be it for today's video. If you guys found value in this, don't forget to leave a like on this video. Drop a comment below what your favorite time frame to trade is. And if you want, go ahead and hit that subscribe button as I'll continue to post more valuable videos like this, primarily around ICT concepts and just how we can overall help impact your trading and make you more profitable. So again, if you guys enjoy this, drop a comment, like, and subscribe below, and I will see you in the next one.